All right, so are you guys ready to to trade that day or to observe? We'll find out, right? So first thing first, I think it's good to note that um, we are Wednesday, right? Tomorrow is Thanksgiving in the US. So market is closed and you also have an early close um, on Friday. So usually Friday, despite that early close, it's pretty low volume. A lot of people not trading at all and making a long weekend with it. So keep that in mind. Obviously, that this small week will affect volume. So keep that in mind as well with your positioning into tomorrow, into Friday, and eventually into a very long weekend. All right. So that's the first note that I wanted to make. And then now let's look at the market. Let me share my screen first. Uh, this one right here. Pato, can you explain what is NCFD, please? Is it the stocks above their 5 DMA? All right, yeah. So I don't track them anymore, as you know. Um, what I would say though is I am very, very, very cautious to rely on such a very short term breadth indicator when we are coming out of multi-week and even months consolidation, pullback, or correction, whatever you want to call it. It's very, very common to get that initial breadth thrust of multiple days that bring every short-term breadth indicator being overbought. And then when that momentum burst is overbought, yes, you can have backfilling, but you can also have a lot of stocks bucking the trend, just simply going sideways or just continuing. That's very, very typical of early out of a pullback and correction. And go back in time after those larger correction or larger pullback, you will see the same. Um, but if you rely too much on it and you wait too much, uh, then you risk to miss some nice liquid leaders entry. So it's important to look at those. For me, it's let me share TradersLab. You know by now that I rely exclusively on MCO nowadays. So for me, even short term, being normalized is not overbought. Um, we are only at 0.41 standard deviation above the average. Uh, and like I said, look at history, right? When at the end of April, we we entered two standard deviation above the average on April 25, right? And from that similar 0.41, it was on April 22. So let's just go into April 22 on, let's say, QQ or NQ, that would do. So April 22, we had similar MCO reading as right here. So you would have locked yourself out of all that, right? Or initially this. So that's why I say out of a larger pullback, it's normal to have those bread trust. And it's not the same as it happens um, later in the trend. So right here, probably it was extended. So uh, you want to take notice of that. Probably later in the trend as well. That's when you need to take that signal as being cautious and maybe trim a bit more, but not early out of a pullback. I think it's I hope it's clear. Tuba, you don't like my face? uh, yeah, let me bring that up. Right. What I was sharing is that we had similar MCO reading when we were here. So that's the run that I was explaining. All right. So let's get back to our market analysis and usual routine. If you have questions, don't hesitate, guys. We'll take it as we go. All right. So QQQE. We have no confirmation, right? Um, and as I will explain, I engaged yesterday mainly due to anticipation. All right. Uh, I like the early strength and action around that base structure. And for me, that base structure is pretty important. What is more important is the 21 DMA structure, obviously. But I like that we had that first initial low. Then we rallied. We had that daily reversal pivot right here. We had that first back test of the daily reversal pivot. And we were right against that structure, right? Yesterday we opened weak. We back tested that reversal pivot once again. It held with a micro high low. And we pushed right past that base structure for a reclaim. So now I'm treating that as being a potential shakeout below that base structure. And that's my anticipation setup, mainly because we have that higher low structure on QQQE. And now let me go back into, and I am explaining what I saw yesterday that pulled me in the market, right? That's what I will try to make clear this morning in this PMS session, and then we'll look at what we could do today. But first, I just want to make sure that why I engaged yesterday is clear. So let's go into TradersLab. And by the time we had that higher low structure being made, base structure reclaim, despite the fact that we were still below that 21 DMA structure, what pulled me in is that we had that deep oversold bounce on MCO, and at the same time we have that McClellan summation deep oversold, nearly 2 standard deviation below the average, hook up. So for me, I look closely at the McClellan summation, and I look for those hook up in deep oversold. This is where uptrend starts. It does not mean that all hookup in deep oversold will lead to a new uptrend. Sometimes we are in deeper correction phase and larger bear market, and those are faded, and we go into a new leg lower. But that's my hedge. So when I get that deep oversold hookup on the McClellan summation, when I get that constructive action on QQQE and the other internals that I would show you, then I know that my hedge is there. I need to execute. And you also had the liquid leaders acting constructive around their 21 day structure. You had stocks like Google, Light, AVGO breaking out from their setup as well, leading the way in the liquid leader basket. So for me, that was all clues that made me forge um, conviction into the market anticipation setup, right? That's all I can do. Recognize when the odds are there and take calculated risk. I'm not saying the market will rally 15% from here. That's not what I'm saying. Sorry. Uh, I'm saying that right now with that hookup with the QQQE constructive action, with how the leader are acting and the internals, then my hedge is there and I need to execute. That's all I know. Talking about the internals, that was also a good conviction builder yesterday. You know that I rely a lot on credit spreads. We covered that last week and early this week. We were still at risk of a breakout, but that's not what we had. So we rejected the top structure area. We broke to a new low below Thursday's low. And yesterday, what happened for me, it was very meaningful, is we broke below the now declining 21-day structure, but we also broke below that uptrend line structure that was made with the most recent swing lows. So we have a breakdown of structure, just like we would have broke out from here. That would have been a breakout of meaningful structure, but instead we have the meaningful breakdown of that same structure. So for me, it changes the narrative. We're transitioning into risk on market based on that credit spread chart. And we have the same thing on VIX, right? We rejected that recent swing high. We broke down back below that base structure, back below that 21-day structure, and also from that uptrend line structure as well. So same confluence between the credit spreads and the VIX. Again, it's not guaranteed. It's not 100% win rate. But you know, and you see the mindset and the clues that I was trying to pick up yesterday just to build that conviction of that anticipation setup. And again, it was QQQE price action. It was the McClellan summation hookup from deep oversold. It was how the liquid leaders were acting. It was credit spreads. It was the VIX. And Bitcoin was not there. There's still nothing constructive. That's kind of the still red flag basket. But yeah, we'll see. Maybe it was climatic action and it just needs times to build, but it's not there yet. So you see now, right? Price action, breadth, internals, liquid leaders. Take that all together, that forged my conviction to execute and hand that sideline and cash period that I was in. So at some point you need to execute, right? You need to recognize the clues that the market gives you and just go for it. And the way that I go for it is not by loading the boat. It's by going for the right names, the liquid leaders. So I was going into the TradersLab daily pullback scan. That's the only thing that I use. Pick the top leaders, the top hardest names that were still within 1 ATR from their 21 DMA structure. I've put some risk, 1% new open risk, new exposure risk, my NAIR, and that's what I was managing, keeping my NAIR below 2% and trying to build on that traction and keep my delta as my cushion was growing. I was adding some risk and trying to keep my delta around 1%. So that's the way I progressively opened exposure yesterday as I was getting good feedback from my new buys. All right. Um, so we talked about the market, we talked about the internals, we talked about breadth. Now, yeah, what was the buy that I executed yesterday? Um, WDC. So for me, it was important to have some exposure in the leading memory basket. So Micron, WDC, STX, those were clear leader in the past market cycle and during that pullback as well. They resisted the best, right? And that's good clues. And you want to get into that basket, that group. So WDC, I like the 21 DMA structure reclaim here, and we had that back test as well. So that was really a micro setup, but sometimes you just have to go for the leading name and group and just buy into the 21 DMA structure, right? So I'm not stopping myself, and that's a question that I had yesterday. What was the entry? What was the trigger? And more, I want to kind of, oh, that's a nice car. That's a dream car. All right, so I want to more and more kind of detach myself of on the macro, on the micro, sorry, and get into the macro in the terms that I want to identify the leader, the market setup, the right time to position, but I want to buy the 21 DMA structure. And if it's not giving me the perfect red to green move, the perfect daily reversal pivot, the perfect, I don't know, 1 hour opening range breakout, I'm not chasing those perfect entry. I want to engage at the right spot in the right names at the right market timing. That's my game. Build that portfolio of liquid leaders to ride that market window, that market rally. So WDC, CN, it was a 21 DMA structure reclaim and backtest as well. LRCX, playing that shakeout and 21 DMA structure reclaim. And Caterpillar, really like that setup. We have been leading in the most recent cycle. Nice pullback, low volatility, really good contraction on the right side, high low structure, reclaim of the daily reversal pivot right here. So I really like that setup. So those are the names that I executed. Let's say if we can trade some 2-hour target today, which would allow me to open fresh new exposure and increase my exposure, but with the same portfolio risk, right? That's how I determine my exposure. That's only with the new exposure risk, my NAIR. So what I have in focus for today, I have APH with 21 DMA structure reclaim and backtest. TER with a shakeout and 21 DMA structure reclaim. Core, a bit stronger, never gave up the 21 DMA structure on this pullback. Yesterday would have been a nice entry, but I didn't have quite the size that I wanted with how far it was. So I will look for a bit of weakness if we get it today to retest maybe that reversal pivot. And IBM as well. So IBM, a nice larger base, and look at that perfect cup and handle right here, right? So we broke out from that cup and handle on earnings, then kind of a base on base with a shakeout during that pullback right here. And now we have another 21 DMA structure reclaim and backtest setup. That's what I'm playing here. All right, so those are the new positions. Let's see how they go and they build cushion today. If they do, and if I can lower my NAIR, then I will look at new exposure, but only then. If I can get maybe 0.25 EC risk on a position, if we get some weakness at the open, I would go for it. Otherwise, I will really wait to see how my new exposure is doing. All right, so that's the game plan for me today. Let's take some questions now. So Art is asking, you often mention NAIR around 2%. Is this something that you got used to over time, or are there some personal statistics? That's really something that I get used to. 2% of my capital is what I feel comfortable risking on a positioning attempt. That's purely based on experience, on what I feel comfortable doing. And that brings me in the 40-50% ish exposure if I can get good entries near the 21 day structure. So that's a good place to start a new uptrend, not being too aggressive, not too slow either. So you're correctly positioned in case the market goes and leave you behind. So Meat Budget Sleep is asking, as of yesterday, your open heat is 2.4%. What's your biggest tolerance? Yeah, open heat is tracked a bit later in the trend for me. When I start to build exposure, I'm tracking my NER, my new exposure risk. That's what I use for progressive exposure. And right now I'm at 1.8%. I want to keep that around or below 2%. And as I gain cushion on those as well, then my delta will lower, right? Because I have cushion. And the delta is simply my NAIR minus the cushion. So I'm able to finance off my cushion as well. So when my delta is around 1% and gets lower and even break even, it means that my cushion finance my new exposure risk. And in that case, I'm more inclined to take up new risk because it's finance and I have time to react to close new exposure if the market goes against me. But yeah, really more tracking the NAIR metric and not really the open heat. The open heat I will track when I have my exposure, and I use it when we get overbought, and I will trim some into strength just to lower my open heat later in the trend, so I don't give up too much of my gains when the market might go into pullback. And yeah, open heat around 10% is where I'm pretty comfortable later in the trend. So Alex G is asking, why WDC not SNDK MU? Simply because it was stronger in the TLAB scan. That's all I rely on. So yeah, WDC had a better score, but MU looks very good. It was just a bit deeper in this pullback, and RS rank got impacted. So I went with the highest score. SNDK is too high of an ADR for me. And I don't know, maybe it's the liquidity or something like that. That's not a name that was in my scan altogether. So let me just share TradersLab, right? And when I say I really use that scan, I really use that scan, right? When it's time to put exposure, that's on my second screen. And Warner Bros. I don't want to execute simply because there's kind of an acquisition news pending. I caught that move, but I'm not inclined to re-engage because of that news. But what I did yesterday when it was time to execute, I went into that scan, right? WDC, boom, I executed that. CN, boom, I executed that. Then we had STX and MU in the same group. I already have exposure. So APH is in the focus list. Core, they were not there, so I executed CAT, LRCX as well. And all I know is get that scan on my second screen and execute what I find to look best, give me the best entries in those top liquid leaders pullback scan. That's all I do. All right, SPS, curious, what's the nomenclature of your trading view flags? Oh, yeah, I just wanted to make them pop. So I made those yellow flag, but they don't mean anything. So I have my main price action and internal, so credit spreads and QQQE right at the top. I want to track them closely. Then my new exposure section. Then if the 2R is tagged, then I move them into de-risked. I have my focus list and stock list. That's everything that needs to be known. So Tuba is asking, during the day, how do you watch retest of pivots to make entry? I just have my focus list open and watch them from time to time. I have an alert set for that whole watch list at the 21 EMA. So I will get an alert, but other than that, it's just by looking from time to time. So Vic is asking, do you factor in that indices and stocks have been up for 3 days? No, it's not in my system. Short-term breadth indicators are not overbought. And I covered that at the start of the session. Maybe you were not there. Watch the recording, but I covered that. It's very, very, very typical early after a good pullback or correction to see that breadth being overbought quickly, and that's not a sell signal. That's a buy signal. So Jennifer is asking, do you set alerts during the day for targets? No, I don't. But yes and no. I have my limit orders set at 2R already, and they will trigger and automatically sell my shares at 2R. So yes, I receive an alert from my broker, but I don't have alerts in TradingView to execute those limit orders. It's all taken care of already. So Ashish is asking, hi Alex, welcome back. How much is your current exposure and how fast you would like to build given market is showing strength? So yeah, go in the PF update channel. Everything is there and detailed. I'm at 48% exposure, but you will have more explanation about my exposure there. And I already covered my game plan. So rewatch the session. I already explained that. No, my limit orders are made right when I put the trade. So I put the trade, I make the call, and then I take my 2R with the number of shares that correspond to 1/3, and I put the limit order good until cancel, and that's the way I do it. All right, when you talk about using your delta as cushion, you're using unrealized cushion and not moving any stops, so aren't you in effect just adding risk with additional position? I guess it leaves you to option to stop things. Yeah, that's exactly it. Uh, all right, so I've learned the hard way uh, that being too slow to increase exposure leaves you in a bad spot because you tend to open that new exposure if you're too slow and waiting for two confirmation or traction. Uh, you're usually entering trades when it's too late, right? So I want to be pretty aggressive on the turn. That's the way I trade. Uh, I want to open exposure fast in a controlled way, not too aggressive, but still aggressive. Um, and to use that initial momentum to build traction, to build cushion quickly. And I have my 2R target that is pretty close. So maybe today or Friday, you will see those 2R target being hit. And that will lower my nair very quickly. Because when I take my 2R target, it basically remove 0.5% of nair. Uh, so I'm using that unrealized profit. That's a nice way to put it to finance new risk. But like you said, and I covered that a bit earlier, if it doesn't hack like I want, then those new trades, those new buys, I can cut them off pretty quickly just to reduce my risk. But that's how I like to be aggressive and try to push it a bit with that unrealized profit and cushion. And if it works, then you're in a good spot with good exposure early on in that trend. And if it doesn't work, then you simply remove it at the end of the day. And you'll see me very often remove trades that didn't hit their stop loss yet. Uh, and I call it risk management. At the end of the day, if I tried to push a bit more and it didn't go as I planned to go, then I remove it and simply say I manage my risk, right? I want to bring down my nair from those attempts. Yeah, CLS and power looks good. I didn't like CLS wild action on the right side, and that's why I didn't engage CLS, it's in my stock list, and what I want to see is a back test of the 21-day mid structure. That will give a much better entry in my opinion. And power, the same thing. That's wild. That's way too wild and wide for me. But that's a nice chart. You have that base structure retest, that shakeout right here. But it's too wide and loose for me. God, guys, you have so many questions this morning. That's perfect. How do we get to know in real time about you taking position? Hey, Ashish. All right, so I just sent you a link. Okay, it's the room onboarding session. Okay, so in that session, I will explain everything, every channels, where you find the trades, where you find the explanations, everything you need to know about the Discord and where is everything. So take a look when you have time today. That will probably answer to all your questions. All right, so cheers, Alex. I have 2% NAIR, but work with tighter stops and therefore 85% exposure. NAIR delta is down to 1% and I have already the risk position. I know you cannot give individual PF recommendation, but any general feedback on this? Yeah, okay. The thing with... So I know you take very small, so big position because you're really close to your stop loss. But the risk with that, and that a risk, I'm not saying it's bad or good or anything. The risk is that you try to position, you take 2% NAIR, 85% exposure, but what happens if you gap down and the market reject that 21-day mid structure, for example, and we gap down, then you open with a larger loss that your NAIR. That's why I'm not trying to snipe those entry with really small risk with big exposure, because I want that cushion from the low of the 21-day mid structure. I want that cushion right here. I want that cushion. I want that cushion. Because then if we gap down and that positioning attempt fail, I'm not there taking a 4% EC loss instead of a 2% because I was too aggressive. So that's the only thing to consider. So mags, do I look at mags? Not really, to be honest. And you'll get probably the same feedback and chart from QQQ itself, because QQQ is basically the mega caps. So what I use is QQQE because it represents the stocks that I trade, and I want to base my decisions on the stuff that I trade. So that's why I use QQQE. QQQE is the QQQ, but equal weight. There's no overweight towards the mega caps. Yeah, GV looks good on the weekly. Um, but I don't know. I would personally wait for the reclaim here, some confirmation, and then the back test of the rising structure. But that's me. I don't like being in the chop here, and it's not leading recently. Okay, last question from Jennifer. How many max position do you like to hold at any or one time? Um, I don't really have max position because sometimes I might go to 15 position simply because I still have small runners when we have an extended uptrend. Um, but let's say no runners and no small positions. I like to be around 10 position, 8 to 10 position. That's kind of my sweet spot. All right. So 9:25, it's time for the market. So I hope you enjoyed that PMS session. There was a lot to talk about with yesterday's action. So again, I think we have some clues that the market is trying to start a new uptrend, but we will only know when we get that final confirmation. So until then, there's an edge. That's why I executed. But I will be uh, fast to revert and manage my risk if it fails. Don't be surprised if you see me go back to cash. If it fails, it fails. We'll call it a failed attempt and wait for the next one. But I think that we have enough clues to at least test it. And that's a game of probabilities. Again, trading is all about probabilities and recognizing when the odds shift in your favor. And right now, that's what we have. All right. So have a good session, and all to all my American friends, have a happy Thanksgiving. Enjoy that with friends and family. Share a good time. Recharge your mental capital, and we'll see you again on Friday next week. All right. Take care, everyone. Have a good day. Bye bye.